Hello and good morning. Welcome to the official breakfast stream. Welcome everyone. Hello, Jose. How are you today?
Pretty good, Neil, and good morning to everybody watching. Thank you for joining us. Another morning, afternoon, evening, wherever you are, but appreciate the support. But yeah, Neil, doing pretty good. I mean, in forms of stock events, actual companies, I feel like this week might be a light week. Hopefully it's nothing too crazy.
Yeah, no, this week, I mean, earnings-wise, there is literally nothing for this week. Absolutely nothing. We do have some macro event for the week. We already had some Chinese data coming out for the month of May. We have some Fed meetings, so we can talk a little bit about the macro, and then talk maybe a bit about some company specific events or news later on, and then of course we'll answer whatever questions come in. So yeah, good morning to all of you joining us.
Oh, go ahead, Neil. Yeah.
Pretty sunny. It's pretty sunny. It's getting pretty warm here, actually. Good morning, Lisa.
We got Lisa. Good morning, Lisa.
The better Lisa here. And good morning. So currently, pre-market is green. European markets are green. Asian markets are green as well. So.
Oh, really, Neil? That was. I mean, I haven't
Yes.
looked at pre-market yet, but obviously, but I would have expected with everything happening globally, maybe some reddish, but surprised to see some green here.
Yeah, even oil is down 1.2%. So when everybody thinks we go one way, we will go the other way. But of course, that's just pre-market. Things can change when the market opens. But yeah, European markets at the moment green across the board, Asians as well. So yeah, not bad at all. I can start maybe with a little bit of macro data here coming out of China. So China's May retail sales grow at the fastest pace since December 2023 as subsidies help boost consumption. So we see our retail sales jumped 6.4% from a year ago in May, sharply beating analyst estimates for a just 5% growth and accelerating from the 5.1 in April. Growth in industrial output slowed to 5.8% year over year, slightly weaker than the analyst expectations, but I guess still fine. 5.8 compared to the 5.9% that was expected. Fixed asset investment reported on a year-to-date basis expanded 3.7%. So it does seem like data out of China is coming in better than feared. Should be good for Chinese stocks, Alibaba, JD, Pinduoduo, and all of those, especially after this tariff period, I'd say. Um, Plus the fears that the Chinese economy might slow down. Of course, you will always have to ask the questions: is this real data? Is this manufactured data? Yes or no? I mean, I'll just go with yes. We have to we have to think that these are real numbers, and then we'll see. Um, we'll see how real they are in the future. But I think this is pretty pretty good news for them. We then
If I may, Neil, here really quick,
Mhm.
would you consider this also kind of very good news for like phone companies? I know kind of like your Apple. I always hear kind of the strength and weakness of the Chinese space and kind of the Chinese economy. Could you see this as a tailwind for companies like Apple? And then you also have other players like Qualcomm, who do provide a lot of chips for the mobile business. So how can that impact? Do you think this is anything for them to be bullish about?
I mean, it's better, right? It's better to see this than continued struggle in China. Now, that's not to say that it's going to be good for Apple, because Apple is already struggling with the competition, right? Huawei is becoming stronger and stronger in China. So, yeah, I guess it might be better for Huawei, maybe a little bit better for Apple, but I guess it's better for the consumption-based companies like the Alibabas and Pinduoduos and all of them. But for Apple, I think yeah, it's up to them, because let's be honest, it's not that exciting anymore. Right? Oh, a new iPhone. Okay, cool. Oh, look at this. What was the last thing that they announced like a week or so ago? The
The liquid glass, I think, fluid glass. I forget what it was called.
amazing stuff. Liquid glass has, it has actually become a meme, because every other company out there suddenly, like I think Revolut said, oh, if we have X amount of requests or signups, we will release a liquid glass card. So I was like, okay, I guess Apple, a $3 trillion company, is becoming a meme nowadays.
Yeah, but yeah, I guess you're right. Right, they do have a nice amount of competition in that space nowadays with Huawei. I mean, I feel like sometimes when I see random shorts or videos on X about kind of Chinese tech, it's usually Huawei kind of obviously the most likely paid sponsor, but still they kind of showcase how cool those Huawei phones are over there.
Yeah, no, there are definitely some cool things going on there, for
Yeah.
sure. We then, this week, pretty big week, US economic data. So we have the New York Fed Manufacturing Index today. Then tomorrow we have retail sales, industrial production. Then on Wednesday, pretty big day, jobless claims, building permits, housing starts, and Fed rate decision, where you basically get the dot plot. Basically, that's going to tell us whether or not we're still expecting two rate cuts, maybe more, maybe less. So Wednesday is a pretty big day. And then apparently on Thursday, there is another holiday in the United States. I guess you guys never work, but okay. And then Friday, you have the Philly Fed Manufacturing Index. So most of the focus should probably be here on Wednesday. Jobless claims and Fed rate decision. We'll see. We'll see what the explanation will be, if there are only two rate cuts or if there are maybe less than two rate cuts. I mean, can he still use the excuse of, oh, still uncertainty after even the last 2 months of results? I don't know. Maybe, maybe not. So, yeah, we'll see. Gary asks if this is live. Well, since I'm just answering this question, I guess we are live. I guess we are live, unless unless we are now in the multiverse and different timelines. But yes, we are live. We are
Yeah.
1:10 p.m. here in London. Yes, it's
Neil,
2:10
so is
here
the
in
market
Belgium.
closed on Thursday?
I think so. No, I think so.
All right.
Let's see.
Yeah, I think so. All right, but I mean, Neil, to be honest, right, I don't follow too much of
Yes,
macro
it's
events.
closed.
But you would say Wednesday is probably the one that's going to be impacting the market the most.
Yes, because I mean, if we're still at two rate cuts, which is the expected number, then fine, then nothing changes, right? If we suddenly get 3, then I guess the market will rally, and if we get 1 or 0, then I guess we go down, because that could indicate that the Fed sees very little improvement in their inflation target, even though based on the data that we've seen for the last 2 months, we know that that is not very correct. But yeah, so Wednesday is the big day, but these are of course just short-term things, right? You have to focus on the companies that you wanna buy. Some of them, yes, can get impacted if rates stay higher for longer, or if we go lower faster. So yeah, but yes, Thursday the market is closed. Just checked.
And one quick question. I also see some questions coming in here on chat on both our ends, so we'll discuss some of those questions in a bit. But Neil, you mentioned again. I don't follow the macroeconomics as well as you do. You mentioned we're expecting 2 rate cuts this year.
Mhm.
When are the rate cuts expected? Are they both later throughout this year, or is one coming soon? I don't know if you have that data. Look at this guy, Mr. Fancy over here with amazing presentations and
I
ready
know.
to answer all my
Um,
anything I ask.
almost all of your questions. Um, no, so I think by I can actually pull up the Fed the probabilities, because by the December meeting, I think we should be already expecting um, 2. So yeah, makes sense. The last meeting of the year. Um, but let me see. Da-da-da. If it wants to load. Okay, so currently we're at 425 for 425 450 for the June meeting. That's not expected to change at all. In the July meeting, we have here 81% probability that we're not cutting at all.
Mm-hmm. Okay.
18.6% chance of a 25 basis points cut. Then in September, we're already at over 50% of a cut. So by September, well, in September, we might have our first cut.
Mm-hmm.
Let's see what October tells us. October currently is still 44.5%. We're still only have one cut. 32.9% say that that will happen, that the second cut will happen then, and then the last meeting of the year, almost 40% chance
40%. Okay.
of having those 2 cuts, with a small change, I believe. Yeah, a very, very small change compared to a week or a month ago. So
Yeah, so thank you for that. And Neil, we got some questions here. Let's see what we can. Oh, I like this question that kind of started off almost earlier on. Let's see if I can pull it up. Um, in it for the long run. Appreciate the morning compliments. So, pair of ace analysts will say, where are the opportunities in the software stack? Would you be considering Google and Microsoft as players? I'm guessing players in the software stack in it for the long run. I mean, if a diversified play in the software space. I mean, I think obviously Google and Microsoft provide some solutions there. I don't know if I would consider Microsoft a purchase for me at these levels, Neo. If I had to choose between the two, I think the one that would give me the best risk to reward ratio is Google at these price points. Would you agree there, Neo?
always Google, always Google.
Always Google. Now in the software stack, I mean, the software play, there's different ways you can play it. The way I'm playing it in it for the long run is, for me, I really do like the valuation and growth opportunity of GitLab, ticker GTLB. We did see the stock kind of drop after earnings. We've talked about it in the lives before, right, Neil, where it showed that the company talked a little bit about the AI competition, talked about customers kind of trying multiple products at the same time. So it does seem like competition is a little bit heating up right now. But with the market cap of less than $7 billion, I like it as a growth software play. And I was just looking at it, Neo. I haven't done a full review on it just yet, but I will later on today or tomorrow. Adobe just reported earnings, and Adobe is a more mature company. I think we've pulled it up, Neo, where kind of compounded annual growth rate in revenue is like 10%, 11%. You might be pulling it up pretty quickly here on FinChat. And Adobe is one that just tanked after earnings as well. It dropped about 7%. Overall, I think the company's doing well. I think with this one, Neil, one of the biggest things is every quarter, no matter how long we're going, every quarter the same question is going to come out for Adobe. Is AI eating its moat? Um, and I think because of that question, it's always going to be very volatile after earnings, and any slip up on earnings would be attributed right away to AI eating its moat. And I think we can see it very much in its valuation. Just looking at here, Neil, you can look at trailing 12 months PE ratio on FinChat here is 25.1. I barely get this. I barely get the. I barely see this on hardware play. Now on the software company that's seeing massive free cash flow opportunities. Next trailing 12 months PE is 17.9. Again, I don't see this in a software company ever. I usually see this in hardware stocks. So in valuation, Adobe is looking somewhat attractive right now. Again, I mean, you can see earnings per share forward 2 year, 12.1%. I mean, revenue forward 2 year, about 9.5, so still double digits. And this is a massive cash of 5.7 billion. You can see the financial health there. Net debt of not even $1 billion. And I don't know if we can see free cash flow numbers, but free cash flow numbers are pretty impressive. So Adobe is one that's starting to get right there, 41% in free cash flow margins. Adobe is becoming, I think, a hated stock, and it's looking like a failure stock. But these valuations are, I think, very attractive. I'm gonna see if I'm thinking about this one, Neil, as another software play.
To come back at the stock you dumped.
Yep. Yep. So I dumped this one during the crash because it was barely moving, right? And it was kind of a low beta stock. So I'd rather kind of finish this stock, sell off the stock, and buy high growth players with higher beta. And during luckily we got kind of like that V-shaped recovery. Did amazing for me. Now I'm not looking too much for those massive growth plays. As I think we both have said that maybe some of these valuations are not great for extreme entry level. So I'm starting to go back into my somewhat mature, somewhat growth, somewhat AI play, and I think Adobe kind of fits it around that, around those thoughts.
Yeah, okay, well, fair enough. I mean, we can see that free cash flow is actually expected to grow much faster than revenue over the next coming fiscal year. So I guess that's a good sign. I also previously checked this on FinChat. If you go and look at the, where is it, digital media ARR, this has also been quite impressive. So if we look at this, not bad, right? Not bad at all. Of course, this is since 2012, so let's take it a bit closer to where we're at right now. Compounding at 15%. Digital media ARR for Adobe, not bad at all. Pretty good. I mean, this is yeah, just hate it because of the FUD and speculation. I agree, although of course I could say practically all agree that Google has a wider moat than Adobe, but Adobe with Adobe Creative Cloud, all of the Adobe solutions, the fact that they're going after enterprises, businesses more and more, especially for marketing purposes, documents, it becomes a sticky product, right? They have, I'd say they have pricing power, because once you're in it, once everything, all of your marketing department and whatnot, design, creative, works with Adobe, why would you leave it? And especially now with the AI tools, I think they even mentioned that in the last earnings report, which we can pull up here with a nice AI summary. All of that on FinChat. We have a link, of course, that you can use for the stream because we are we are so good We are so good. So you can use our link. I'll pull it up in a second.
Yeah. And then here,
Voila.
Neil, we got a question from McDucks. Who are the competitors? I think for Adobe, the big competitors right now, Neo, are a lot of private companies. Like Canvas is one of them. Um, in you also have kind of like just a lot of AI generation tool players that are coming out. Uh, but I don't expect these to be. I mean, the thing about Adobe is, I think this is the right play for enterprise players. Maybe the small content creators that have just one YouTube channel, a few YouTube channels, or a few social medias don't need the full suite that Adobe provides, and that's why it might seem like a competition. But I would guess if you are kind of like a true heavy design player, or kind of really works in this kind of digital design world, Adobe is a must needed toolkit. But so I think in competition, you have here who are taking small bites at Adobe's different opportunities, right? They have video editing, animation, photo imaging, and all the things in between there that I couldn't name. But yeah, so I for evaluation, I was shocked to see a PE ratio of 20. That's these trailing 12 months of 25s in the mid 20s, and then forward PE ratios of lower than 20. It's looking pretty hated right now.
Yeah, no, I agree. I mean, if we look, this is probably a number that they should have kept private for now, right? The AI book of business that is tracking ahead of the $250 million ending ARR target for fiscal 25. It's nice that they give us this number, but it's very insignificant. I'd say, right? 250 million. Okay, cool. But I guess this is a number that they should have maybe kept private and focus more on maybe the Firefly impact, how many users are using that, cross selling, how is that helping with retention. But yeah, all the rest is definitely doing well, right? Firefly is actually very impressive. Like everybody's talking about, of course, VO3, which is amazing from Google Gemini, of course, at ChatGPT. But I highly suggest anyone to go and try out Adobe Firefly. It's actually free to use. You go on Adobe Firefly and you can try text to video, I think image to video as well. Pretty impressive. And like you say, with Adobe, the most important part here with Adobe is that businesses can work and create campaigns without having to fear getting hit with licensing issues, copyright issues, because everything that is being made with Adobe is licensed. So you can use it as marketing material, advertising material, you name it, without fearing that. And I think that that's
Yeah.
something that they've definitely done very well over the years. And I'll say the same thing that I said time and time again. Adobe it's their race to lose, right? Because they have all the tools, they have the ecosystem. It's their race to lose. If they do not innovate faster, if they not promote their products better, like get really the hype, then that's how I see them losing to others. But so far, I don't see that happening since it was another record quarter for them.
Agree, Neil. And before we end this one, I just want to say one more point that there are some bearish cases, right? We talk about competitors. The other one, Neil, is it seems like this one doesn't know how to truly monetize its AI just yet. It keeps kind of flipping flopping between different type of pay models for AI solutions. So maybe the market is saying like, hey, while you do have these cool AI solutions, you still don't know what's the best approach for it. So that could be creating some fear out there for investors. But I think that's something that it's such a new market. It will get figured out pretty quickly.
Yeah, no, I agree. I agree.
Just catching up to some chats, Maritza. I still won't sell my Apple. It used to be that an apple a day took poverty away. Oh well, so that's a good saying there. Um, yeah, I mean, I think we can't argue that Apple has a great business model, right? It's more just in this
Very.
innovation era of AI. I think you need more um, than just a good business
Yeah.
for continued success.
For those that are wondering why the trade desk is down, this just came out. Adobe Ads and Roku announced partnership, creating the largest authenticated CTV footprint. So actually, I wonder how much Roku is up 8%
Nice.
on the news, and the trade desk is down 2%. Okay, not that bad, I'd say. And well, the traders, I think, had a nice recovery. No, after the crash, yeah, it was 45. Then we went closer to at 80, so quite a recovery. Now we're back under 70. I'd say if you think that you missed the rally before, maybe this will give you a re-entry point, a better entry point, I say. I think we also have Palantir, new all-time highs, ladies and gentlemen, $140 for
That's wild. What is the market cap now? Is it close to 500 billion yet?
no, still
No.
330, 350, something like that. You wanted to you're giving them $150 billion in market cap for free.
I'm rounding up, Neo. That's how I round up. It's either 0 or 500.
Yeah, Circle keeps soaring. This thing is up another 11% pre-market. Pretty crazy. This thing. What about? Let's see. What about the Chime? Chime is flat. Okay, if Chime is flat, then I wonder if SoFi is flat as well. Yeah, SoFi is beating Chime. Game over. It's a much better stock. Thank you very much.
What was the difference between Chime and Circle? Again, I don't follow the fintech space. Is one that deals more with like crypto stable coins, and the
Yeah,
other one
Circle
that's
is
more
the
like
stablecoin one, and Chime is the fintech player. There was one extra thing that I wanted to touch on. There was a report that came out that said that so equity markets in Japan, the European Union, and China are expected to outperform the US in the next 10 to 15 years, according to JP Morgan Asset Management. The assessment comes at a time when the US has been struggling with a weakening currency, indeed, and worries about high fiscal debt. Very true. And so this is basically what they expect. So 2025 long-term capital assumptions, market assumptions, expected returns in the next 10 to 15 years. Japan is sitting here at the top. Now, other than Nintendo, I don't really know that many interesting Japanese companies. If some of the viewers do have or do know, do let us know. The Eurozone large cap, I guess there are plenty of European companies that I can name in the next couple of minutes. Then you have China, and then the US sits right around here. Now, this is not the first time that people doubted, I guess, US equities, and probably will not be the last time as well. So, yeah, this is a very interesting statement to make right now. Do you think it makes sense?
I mean, I can see the thought process behind it, Neo. But just I don't know how much I have to add to this here.
Let's see. Yeah, I do. Wait,
Neo, I think there was
I
a
ran
pretty
a
good
poll.
question for you. Oh, did you? And there's a question for you. I was waiting. There was a SoFi question here, so I thought it would make your day. Robin, I have 200 shares of SoFi. I want to increase to 500 before end of July. People say it's a bad investment, but I still believe in the company long term. What are your thoughts?
Yeah, so first up, I forgot I ran a poll. So I'm running a poll right now. Fed will cut rates 0 to 2, 1 to 2 times, or 2 or more times. Currently, 56% think 0 to 2 times, and 26% 1 to 2, and the rest 2 or more. As for the question, Abdul has been asking a couple of times about CLS. Now, I didn't do a specific video about it. We did cover it in the live stream last week, right? Celeste's CLS stock. We did look at it. Yeah, Celestica, the Canadian multinational design company. We covered it a little bit last week during the live stream. Touching back on SoFi, and then we can touch on this because I think you will like this one. Touching back on SoFi, I have 200 shares of SoFi. I want to increase to 500. 500 week. We have here Nvidia millionaires in chat with 1,000 shares or whatnot. Just kidding. 500 by the end of July. People say it's a bad investment, but I still believe in the company. Well, Robin, the good thing is that you are investing for yourself. So if you believe it's a good company, then you should increase it to 500 shares. If other people say it's a bad investment, they should definitely not be buying um, shares of that company. Of course, it's up to you. I own shares of SoFi. I own a lot of shares of SoFi, actually. I still believe in the business. Yes, it's true that it might not have gone up as much as a Robinhood or as another company out there, but I don't care right now because I am seeing that the business is improving, is becoming better and better. And I'll say it time and time again. If you bought SoFi a year ago, you are up 118% right now in just 12 months. I think that's amazing returns. Now you're going to tell me, yeah, but not everyone bought last year. Okay. If you bought 2 years ago, 2 years ago, you would have been up also over 70%. Also pretty good, right? If you bought 3 years ago, you would be up 130%. So you had plenty of time to buy SoFi under $10, under $8, even under $7. Because I see time and time again people that write, oh, but not everyone bought under $10. I'm like, okay, what? So you think the majority of people bought during the 3, 4 weeks 5 years ago, 4 years ago, when the stock was higher than the price we're at today? No, there's a bigger probability, there's a bigger chance that people have been buying over the last 3 years when the stock was under $10 than when it was above 20 for a day or two. And that's not to say, by the way, that other fintech players are worse, right? New Holdings is an amazing company. Robinhood, very good company. Of course, Robinhood right now, and this, I've said it even when I held the shares, it does very well when you transact a lot. Of course, they are diversifying their business a lot more today. But if we go and have a bear market, I'd say that crypto revenues, equity revenues, options revenues are probably going to go down a little bit. That's just a fact. Luckily for them, they are working to diversify their business, which is why the company is worth how much it's worth right now.
And Neil, I don't follow SoFi, but I do want to share maybe some of the investor thought process that happens. Obviously, there's always a bear to some form of investment thesis. There's always the bear side and the bull side. So I think if you ever hear that a stock or XYZ is a bad investment, try to ask why do you think it's a bad investment, and see if you have enough knowledge within that company to either rebuttal that thesis, or is it something that you're not too familiar with, and maybe it means you still need to do a little bit more research on the company to feel comfortable if that reason is something that you believe can happen as a bearish thesis, or if it's something that is just an overall market thought process. The reason I enjoy the semiconductor market, Neil, is not that I feel I have a dramatic edge, but I feel
But you
like
have.
I can put the fake news and real news to the side, so I don't get scared as easily. Because in the end of the game, with a lot of investments, most of the time the reason you end up losing is you get too scared because you hear bad news is coming, and it makes you sell off. Or it actually works the other way as well. You have good news and stock prices go up dramatically, and then you're like, oh, this is it. I don't think I can go higher than that. So you end up selling. But with the more knowledge you have in whatever stock or investment you have, you're able to say, look, that bad news, I get it, but this is what I see coming from it. And it doesn't mean you have to become a perma bull. It means you need to understand the bear thesis, but still be able to maybe provide a bull thesis for it. So yeah, those just if you ever hear one of your stocks is a bad investment, don't just knock it off and say you're a perma bear or anything. Try to understand why it's a bad investment and see if you can create a rebuttal to it. And if you can, it means you really, really know your investment pretty heavy.
Yeah, no, 1,000% agree here. I'll give a good example with, of course, PayPal, right? I talk about PayPal. Of course, that stock has not performed well. Even though I am up, I could have been up way more, right? If the market really did understand the company. Um, but every time I see, oh, who uses PayPal anymore, right? PayPal is a dying company. Who uses PayPal anymore? And I'm like, okay, let me show you the data that contradicts it, right? And this is something that you can do when you understand what you own. Because if I were to buy, I don't know, company XYZ, and you're telling me, oh, this company is a dud, right? It's not worth it, and I don't know anything about the company, I'll start believing what the guy is telling me. I'll start saying, maybe he is right. Maybe I should be selling my shares. And then poof, the next day the stock goes up because actually it is a good company. I just didn't understand what I was buying. So that's why the most important part when you start investing is investing what you understand and what you know, because it will make your life much, much easier, especially in this day and age of social investing, right? We are here talking live on YouTube about investing. Now, we can come up with different opinions on things, but that's the beauty of it. You don't have to agree with me. If I invest in a stock, it's personal to me. Right? It's my money. If Jose invests in a meme coin like a CoreWeave, it's up to him.
Neil, it was so good. I was gonna be so nice to you, and then you come and hit me with that.
I
Um,
was working my way up to it.
I like this question, Nia. I want to take real quick. So Jose, can you talk about ROCm? So for those that are not familiar, ROCm is the software solution AMD provides. Is this software going to eat into CUDA's moat in terms of engineers that can use AMD's chips using Python? First, I don't think so. In it for the long run, but as a AMD investor, I own AMD and Nvidia, right? Let me say NVIDIA continues to innovate in its CUDA platform. Every other week, it releases a new library that makes its AI chips even better for that selected market. It continues to improve on the libraries it has. And I think that innovation is going to continue. I mean, they have massive software engineers. Now, I don't think AMD needs to be anywhere good for AMD to start getting some traction. What it needs to be, Neil, is good enough where you don't have that massive friction of shifting over to AMD, right? And that doesn't mean you have to be an equal. You just need to be somewhat all right. And I think AMD is going to be somewhat all right in the ROCm software, where certain libraries and certain solutions, you're going to have that opportunity where engineers are going to be like, oh, look, it's very easy to transfer over or to kind of change over to this for this specific workload. So I think that's what it's going to end up being, but I don't think AMD will ever eat into CUDA's moat. I think CUDA's moat, as a full toolbox of all these libraries that continue to grow massively, is going to be way faster. Even as AMD continues to play and invest in this game, Jensen is one of the most paranoid CEOs that I know. I don't personally know him, but that I've read and listened about. And his extreme paranoia is making sure that he doesn't lose this innovation race. So I don't think CUDA has anything to worry about, but I think AMD has a little bit of win, even just by being an A-OK software platform.
Yeah, and that's again what we keep repeating, right? It doesn't have to beat NVIDIA to be a good investment. It just has to be a very good product.
Any questions you see here? Neil, I know there were a few others.
However, question comment by Seek05. Do you think that as long as we are in a cycle of Fed rate cuts, we will be in a bull run? And if so, isn't it better for the Fed to cut rates as slowly as possible? Thank you. So yeah, this is something I kept repeating. I think this is something that Tom Lee also has been saying. The longer you can stretch the rate cutting cycle, the longer you can stretch a bull market. Now, of course, sometimes you will have to cut rates because the economy might be broken, and then the bull market might not work out the way you think. But as long as we have good economic data, good numbers from companies, commentary, consumer sentiment, don't look at the surveys because those are politically motivated from both sides. But as long as you have that, yes, you can of course stretch a bull market for a couple of years. So if we cut two times this year, we can cut two times next year, we can cut two times in 2027. Now we can stretch it out 3 years. That doesn't mean that you should be expecting 20% each and every year. No, but it can stretch that bull market it can definitely help the bull market stay alive for longer, let's say.
See, Neil, we have another one. I like this one from Manuel. Where do I have it? Manuel, Qualcomm is constantly sideways or down. What makes it a buy now? Um, so I think this is one where you've had the same kind of bullish thesis over the long term of things, where it's Qualcomm is diversifying from just being a phone company, right? Because that's what this is mainly known for, a phone company, and most of its revenue comes from the phone business. But slowly but surely, Neil, I don't know if you can pull up FinChat really quick. I think they have a great. We can kind of see like their different revenue segments there for Qualcomm. But slowly but surely, you are seeing some growth in some of those other markets. The automotive market is a market that is growing. The what other market do they have? The IoT market. Yeah. So if we let's look at the handset revenues. Let's look at automotive revenue and IoT revenue. So you can see that the handset has become is still the massive portion. So this company is still truly dependent in the phone business. Now, which one's the blue, Neo? I'm gonna guess the blue is automotive because I see it growing a nice amount. Yes. So the grew is the automotive revenue. This one, I believe, grew almost triple digits versus same time last year. So this is the first thing. It's escaping the handset device, and it's eventually going to be some of these other markets. Now, the transformation of AI is somewhat hopeful that it could accelerate these. For example, VR and AR glasses have become a very trendy topic with both Meta platforms and Google I/O. They showcase both their AR glasses, and they've also talked about various VR glasses that they're working for. So with this one is now you expect the IoT, as Qualcomm provides the chips that go onto the Oculus, and I believe they provide the chips that are going to go into a lot of these Google AR and VR glasses. So the thought process is eventually you're going to be less of a phone business and you're going to be more into these growing automotive and IoT. And think with AI, right? In automotive, that can easily transform into the robotics market as well. In the IoT market, IoT and AI, it could be every type of application or device that we use on a daily basis needs some extra form of processor to create and do some of that AI on the edge. So I think that's the long-term thesis. The real question here is when is that thesis going to really start to play out? So this could be a non-mover. It's a stock that barely moves, but it could be a non-mover until those markets really start to adapt. So hopefully that brought some questions. If it I mean,
Some answers to the questions.
yeah, some answers to the questions. Probably gave you some more questions too. But yeah, some answers to the questions. So Mano, keep if you have, but not a buy. Keep if you have. I mean, I don't know if it's not a buy either. It's if it is a buy, it's one where I wouldn't expect massive returns over 1 quarter or 2 quarters. It has to really showcase that these other markets are coming, and I think they're coming. I think this is one where it has a long accumulation phase, Neil. And once those markets turn around, it will be a massive returner. So this is one where like I'll buy I would small dollar cost average a position over the weeks, over the months, over the quarters. So then when it does turn around, I'll end up waking up to saying, oh well, look, I actually had a very healthy position of Qualcomm. The robotics market picked up, the VR AR market picked up. And now it's the time for me to get these gains.
Yeah, and I mean, this is a small trap, right? Because if you look at valuation, trading PE 15.8 times, forward one 13.3 times, so you're automatically thinking, how does that make any sense, right? Way too cheap to ignore. But historically, this has never really been a company that was trading at a super high multiple PE wise. Plus, if we look at revenue over the past 3 years, CAGR 2.5%. So definitely not a fast grower. And even forward 2 years, yes, it's growing faster, but only 6.6%. EPS a bit faster than that, 7.9. It is paying a nice dividend, 2.6%, also buying back shares. So you put all of that together, and yes, there is definitely value with Qualcomm, especially if you believe that they can actually accelerate their growth and well, grow and take more market share, I'd say, in this AI age, especially with handheld devices, AR, VR, and automotive as well. So, yeah, I think, I mean, the average analyst price target is a bit higher, not that much, $172 compared to where we're at right now. Quality name, I'd say.
And a few more other points, Neo. This one's also kind of entering into the CPU space for the PC market. It's obviously hitting some hurdles here because it's definitely a market led by x86, AMD, and Intel. So you do have strong competitors, and both are trying to continue innovate. So it's not going to be an easy task, but it does have that opportunity. The second thing is they are also working on server chips, on server CPUs as well. And they are one of the partners with NVIDIA. That is, after NVIDIA announced that NVLink Fusion, where you can connect any CPU to your GPU and then sell it as a system, Qualcomm is one of those. So they're going to be providing a CPU, and then NVIDIA is going to be providing a GPU, and Qualcomm will be able to sell that as an AI system. So there's that opportunity as well. With that NVLink Fusion, it's something that will take maybe a few years of actually take before seeing any progress and then any adoption. But ARM ARM-based architecture is being adopted a little bit faster in the data center space, as every kind of hyperscale player is designing some form of of ARM-based chips. So you do kind of have that tailwind. So that NVIDIA and Qualcomm partnership is also one that I always forget about, but it has some optionality. Is it a big optionality? I don't know. It depends on how well that CPU server really is.
Thank you for. Ooh, uh. Um, quick comments and question here. So one from Lance. Really appreciate the comment. I just want to say I truly appreciate you, your channel, and your guest. The guest is the co-host here, for giving us peasant little guys a chance to make a little money for some of us working tons of hours a week. Well, I don't think you guys are peasants. Maybe some, just kidding. Uh, but yeah, we appreciate all of you coming in and listening to what we have to say. We are also, of course, still learning, and we happily do this. Another question here. This is one of the psychological side of things. For traders, I guess it's a bit different. So, a question from Lebanon here. I have a general question, and I hope you would answer. In your experience, what's the most overlooked psychological trap traders fall into? Traders and investors, I guess, fall into different traps, right? Traders have to trade nonstop every single day. If you miss a dollar here, a dollar there, I guess that's an issue for investors. Psychological trap probably is it's the emotional side of it, like seeing that the market is red and you losing money on paper, and then pulling that sell trigger, and then seeing the market rebound, and then you're out of your position and you're like regretting it. It's a bit like a casino, right? You lost money and then you want to double down because you want to recoup that money, but then you lost even more money because you try to recoup that money, and the circle goes round and round and round. So yeah, psychologically, I mean, to me, investing has always been more about controlling one's emotions than being a mathematical genius, because I think even the mathematical geniuses can lose their minds when the markets are down, and then it doesn't matter if you can do 3 reverse DCFs, forward-looking DCFs, upside down DCFs. Doesn't matter if you cannot control your emotions. You are probably going to lose a lot of money.
Yeah, Neil, 100%. I think emotions is the best thing you can control because it's the only thing that you know how your emotions act, right? It's the one thing that makes you different from the next investor, the next trader. The other one, Neil, I would say is believing that something has a pattern and that pattern will continue. So I always hear like X stock always drops after earnings. So after I've seen it 4 times, this is going to be the 5th time. I'm going to short it this time. And then it's like, oh, wait, it didn't work this time. It kind of goes up on it. So it's like believing there's this magic pattern that's always going to continue. So, but yeah.
Do you want to touch on this scale AI meta thing?
Go ahead. Yeah, yeah, yeah. And then we still have some questions. Let's start with
Mhm.
that Meta. Um, yeah.
So apparently, so for those that don't know, Meta bought a. They didn't even buy the company; they bought the person, right? So OpenAI bought Johnny Ive and his company, and now Meta is buying people. So for what was it, $14 billion or so? The
Y- y-
CEO and founder of Scale AI.
Yeah, I don't think we've gotten a real results, but the numbers rumoring around have been around 10 to 15 billion, somewhere around that ballpark.
Yeah, not bad. So there was a report that came out this morning that Scale AI's largest customer, which is Google, plans to part ways with startup after Meta deal. So Google, the largest customer of Scale AI, plans to cut ties with Scale after news broke that rival Meta is taking a 49% stake. So a bit like the OpenAI Microsoft type of deal, staking the AI data labeling startup. Google had planned to pay Scale AI about $200 million this year for the human label training data that is crucial for developing technology, including the sophisticated AI models that power Gemini. Very interesting. The search giant already held conversations with several of Scale AI's rivals this week as it seeks to shift away much of that workload. I mean, that could be a significant hit for Scale AI. And I think one of the rivals, maybe not direct rivals, but one of these companies that might be doing the similar thing is a company that Nebius owns, and that's Toloka, also in the data labeling business, which has already been working with some of the big tech players. I wonder if that company could not be benefiting from this. But yeah, what are your thoughts on this deal and this report?
Yeah, I mean, it kind of makes sense that Google will try to part ways with something like this. If 50%, almost 50% ownership is going to be with the competitor here with Llama, and also in the advertisement space in general, right? So it's not just the LLM competition or AI competition; it's also a competitor in other aspects. So it makes sense that Google would step away. And like you mentioned, there's other players that can benefit out of this. So I didn't know, Neil, that Nebius had kind of like a data cleaning process, because that's what pretty much Scale AI is. It's a solution where you have all these datas, and then Scale AI kind of pays humans to make sure that the data is trained proper is labeled properly, and obviously clean data and great data um, is very beneficial for the training of any type of AI solutions. Now, the question here, Neil, I'm Scale AI, if obviously it's now worth at multi-billion dollars. I think for Scale AI CEO to accept this and go work with Meta and Mark Zuckerberg, because I believe you mentioned that the CEO is transferring over to become part of the Meta team. I think I don't know if it's just me, but after you hit a few billion, I think it's like you don't really care about those extra billions. I think there's only literally so much money you can spend. So if you are transferring over, there has to be a reason. And maybe it does he see Mark Zuckerberg's vision on what AI, and is he getting really excited, and that's why he's willing to let go of his baby and sell it for billions to join Meta's AI side, because he believes Meta will has something good to show. If that's actually pretty bullish. But yeah, that was the first thing. Why did he switch over? And if he did, is it something that Mark Zuckerberg showed him that he's pretty excited and wants to be part of that AI evolution?
Yeah, I guess he secured the bag, right? He secured the bag, and I guess, yeah. Now that the bag is secured, maybe he says, "Look, maybe now that we're at Meta, maybe I'll have more hiring power as well. They have the data centers, they have the infrastructure, they definitely have the money. So whatever I wanted to do with Scale AI, I can maybe now do it on steroids at Meta. Could definitely be
Oh,
the
that's
case."
another thing. Yeah, where it could just be him using all this infrastructure to even increase his original baby dramatically more. And at the same time, it'll be obviously both beneficial for Meta and for Scale.
Yep. Although, yes, Scale is going to lose $200 million from Google. let's see what happens with the other partners. But I guess now that you have the Meta money and infrastructure, 200 million, I think, could easily get replaced.
Okay, and just some comments here, Neo. We see I just received a Google dividend. Is Google paying dividend today? Um, if so, I guess
Very nice.
we all got a nice Google dividend. I think mine just reinvest itself back into
Yes, it
Google.
paid the
Is
dividend.
it? What do you do with your dividends, Neil? Do you build it up? Do you put it into your cash position, or do you have it for reinvestment?
So if I can choose the option to reinvest automatically, I do that. If not, it just goes to the cash position.
There was another question here, Neo, that it was about Take Two, and someone keeps commenting about Take Two, so I want to answer it really quickly. Would love to hear your thoughts. Let's see if you can pull it up before me.
Take two. No, but in the meantime, I'll just maybe answer another question. Julian, yes. So there is the portfolio that you saw in the video, and then the core portfolio is basically the big tech companies without Apple, Nvidia, and Netflix that make up the majority of that portfolio. So it's Amazon, Meta, Google Alphabet, Tesla, Mercado Libre that make up 90% of the 90+% now of the portfolio, and it doesn't change. So it's it's less interesting to talk about that.
All right, I can't find the Take Two. So if you have the Take Two question again, just feel.
I don't know if I'm out or if he's out of the stream. If Okay, he's out of the stream, and now he's back in the screen.
I'm back. Yeah, my apologies. I don't know. My internet's been pretty wonky today.
Now you see,
Um,
so it's not just me. Last week it was me, but apparently AWS and Google had the same issue. So
yeah. I couldn't find the Take Two question, so feel free to ask the Take Two stock again, James. But I found this one, Sebastian. Jose, would you pick Marvell versus Broadcom for massive returner in 2025? I mean, are we starting from today's price points? Because I think if you start year to date, Broadcom is demolishing it dramatically. And actually, Neil, I think year to date, Broadcom is the behemoth in this ASIC and networking space. So I do believe as a strong returner in 2025, Broadcom has the bigger opportunity to grow here. I think Marvell is that company kind of like the AMD to the NVIDIA, where it doesn't need to destroy Broadcom, but it's such a small player. I mean, it's about 50, 60, maybe $70 billion market cap versus Broadcom's $1 trillion market cap, that it just needs to prove itself that it is providing some strong solutions in this for it to be a massive grower in the long term of things. So I would say in the short term, I'll give it to Broadcom. If you give me maybe like 3+ years, I think my direction might change to Marvell, but it's a little bit more risky, right? It's being the top dog means that you always have to chase. Not being the top dog means you always need to chase. You need to continue to innovate. You need to move faster than the top dog to be able to take some market share in this space. But if you do that, the returns that you can get could be massive. So Marvell is kind of like the underdog story to Broadcom's massive lead in this space. So short term, I'll give it to Broadcom. Long term, I believe there's optionality and opportunity for Marvell, and that's why I own it in my portfolio and why I don't own Broadcom.
interesting. Funny because I did see a long post on X. Someone said, "Oh, Marvel is the next 5x or 10x opportunity or something like that," and then I was like, "Oh, interesting. What's the thesis?" And the thesis was technical analysis, and I was like, "Oh, yeah."
Yeah. No, I mean for Marvell investors, this Tuesday tomorrow we do have their AI event, so maybe we get some clarity on some of the AI stories that they have.
Yeah.
And we got the Take Two question. I would love to know if or if not you guys will buy Take Two stock and when.
when they maybe release GTA 5, 6.
For for me, I mean, the gaming market has been a market that I'm not too.
He was going to say he's not too excited about, or something like that, probably. And then he's going to say that we have looked at gaming stocks in the past, and we have seen that most of them have underperformed the market over the past couple of years, other than Nintendo. Nintendo is actually the only one that, because of more recently, the stock did go up in anticipation of the Switch 2. Nintendo has actually outperformed the market. I'll wait until he's fully back. So yeah, Take Two over the last 12 months, it's up 46%. So it has outperformed over the last 12 months. Over the past 5 years, it's up 61%. But yeah, I guess any delays, more delays of GTA 6, it's going to hurt. It's going to hurt the stock. Jose says, I'm down. Okay, so he's down. He has been, he has some lag, and he's out. So, he's back. He has been revived.
I came back. I heard
He
something
has,
out from the camera, so hopefully, it might be better.
yeah. So I already answered to what you were about to say.
What was I gonna say, Neil? That I hate the gaming market and I don't
No,
invest in
that
it.
it's not
A
that
slow
interesting
grower.
to you. It's a slow grower. It has been underperforming the market. We've
Yep.
watched it before. We talked about Nintendo. That's the only one that outperformed.
Nintendo.
Yes.
Yeah. Yes, that's exactly it.
um, which is true, which is true. Plus any delays in GTA 6, which I think is already delayed, will hurt Take Two again. And yeah, I don't know. It's not that interesting, I'd say. Wait, I do have here a super chat. So first of all, thank you very much, Sebastian. What do you think? 199. What do you think about new at $12? Is it back at 12 now? Yeah, it's back over 12 now.
Do you own this one, Neil?
No, I owned it from $4 to 10, and then I said I want more Mercado Libre, so now I only have Mercado Libre. But I mean, no, is if I did not have SoFi and PayPal, for example, like those fintech players, I would probably own new. But since I already own so much fintech, to get new in the portfolio would just mean I'm overweight fintech even more. But then again, I mean, it is a very good company. It is a very, very good company. I still think this, I mean, it's now $58 billion in market cap. I think it can become even, I mean, can definitely double in the future, maybe more. But so can SoFi, so can PayPal in my mind. So even though I like it, I don't necessarily need it right now, especially also since I have Mercado Libre, which gets me that fintech exposure in Latin America. So I like it. If I didn't have the exposure to fintech in Latin America specifically, with Mercado Libre and the local, I would probably own Nu still. But yeah, don't want my portfolio to become an ETF for fintechs.
Just some comments here, Corey. Roblox pumped pretty good. Yeah, I saw this one was up a nice amount after kind of being a fan favorite during the metaverse world.
Is
And
this a
then
game you play?
no. I might have tried it once or twice. Um,
Wow, yeah, it has been going up a lot.
yeah. Then another one from Sebastian here. Different Sebastian. Can Dell be a massive returner in 2025 with the AI backlog it announced in earnings? I think over 12 billion. So I would say I think with AI server market makers, they do have the opportunity to be massive returners in 2025, but I just don't like the risk to reward ratio, right? Neil, I wouldn't invest in AI servers. I'm not a fan of Supermicro. I'm not a fan of Dell. I'm not a fan of HPE. The main reason is while they might all have their own modes and solutions or unique technology that makes them a little bit better than their competitors, it's still going to be a cutthroat pricing war. It's all going to be a cutthroat of who can get the best chips. Because if you get the chips too late, you end up with Supermicro, where you have massive inventory that you have to write off on the Hopper platform because no one wants to buy Hopper anymore. So it's, the market has huge tailwinds. The stocks can go up, but I just don't like the business model, and for that reason, I'm just not an investor. Obviously, these can be great returners, can be can see stock prices rally. If they do rally, I'm okay not owning, because I think the risk is just too much for me.
No, fair enough. I mean, these are definitely low margin businesses. So although they have some momentum, I don't think it's worth getting exposure, another exposure to the semiconductor space through those players, right? If I'd want more exposure to semiconductors, I'd probably go with an ASML or a Lam Research. I don't need to go with Dell, for example.
100%. Any other questions here? Um,
On Take Two might be crazy undervalued. Analysts only project 40 million copies sold in the first year, which is way too low. Uh, yeah. I mean, I don't know. I don't know. I don't know what the numbers of players are right now with GTA 5 series. I know it's 12 years old or something like that, but it is 12 years old, which means that you are currently trying also to sell to a completely different group. Yes, there will be, of course, the people that will buy the GTA game no matter what or when, but I think we have a large base of gaming community that switched to what, to Fortnite, to Roblox, to Apex, to whatnot, Call of Duty, still Counter Strike, Dust 2, still the best map out there. So I don't know, 40 million might be low, might not be. I just know that Nintendo is crushing it. Nintendo with the Switch 2 has record sales already. I think over 3.5 million or something like that, which is completely crazy. It's more expensive than a PS5, and it's more expensive than a
oh,
PS5. The
wow.
games are also more expensive, and
Mhm.
it's less of a, okay, it is handheld as well. So I guess you have that dual use. So maybe that's why you're
The
also paying.
portability, yeah.
Yeah, but still, it's quite crazy that it is more expensive than a PS5. Yet the PS5 can basically serve as your multimedia system as well.
Obviously, right now, I mean, the PS5 has been out for what, almost 3-4 years now,
Yeah,
maybe even more. 20. Was it here
yeah.
during
I think at the end of
COVID?
2020, it came
Yeah,
out.
so 5 years. I wonder when the original Nintendo Switch came out. I'm pretty sure it came out during the time when all the others, if there was a price difference like that as well, or was it like, I believe it was actually. Oh, no. To another point, Neo. Jane's here. Another
2017.
2017 came out. That's wild. That's wild that it lasted that long. Another stock that James would love our opinion is Amazon. And just want to shout out, they are watching from South Africa. Appreciate the support globally. I think it's pretty cool that we get watched. Mr. Worldwide, as Neil says. Um, but Neil, I'll pass it over to you. You are an Amazon shareholder. I'm not, so I think it comes with more strength if you say your thoughts on Amazon, and then I'll follow through with maybe some of my thoughts.
Yeah. So first up, apparently GTA is 30 million players monthly. That's not bad at all. Not bad at all. So yeah, maybe so. I think the price of the game is going to be crazy. So that might be a thing here as well. But Amazon, I love it. I love it. It's a company that manages to expand its total addressable market time and time again, right? Before, I mean, okay, we all know the story. It started with books, then it expanded to everything you need, blah, blah, blah. And then you have AWS. Market thought it was stupid to burn money on AWS. Now it's a business that generates over $100 billion a year, super high margins, went to advertising, went to content. goes into healthcare, now is trying to go into, well, being that satellite internet provider, right, with Project Purpose, goes with Zoox for autonomous vehicles. So it's always expanding its total addressable market, which is why I keep saying that I think it can become the largest company on the planet just because of the huge, huge expansion of their TAM. They're a big player in robotics as well. So what's not to like about Amazon other than the last 5 year performance? Maybe a little bit more than that as well, because it has underperformed the market for sure. One of the main reasons also is I think it's one of the only big tech companies that does not buy back shares. Um, I think all the others are buying back shares, right? Meta, of course, Google, Nvidia, Microsoft. Okay, Tesla is also one of those that does not buy back shares, but that's about it. Um, but yeah, once Amazon starts buying back shares, I think that's when the stock will start to move quite a lot. I really, really hope they don't pay a dividend for the next 10 years.
Yeah, yeah, yeah. I don't own Amazon, but this was one of those stocks that I would have gotten pretty excited to buy during the dip, and that's why I did kind of like that Mag Seven ETF approach because Amazon and a lot of the Mag Seven stocks were down a nice amount. But the aspects of them being a massive robotics player is very bullish. I mean, entering the advertisement space, they are definitely pretty big with the AI infrastructure, and they are designing their own AI chips, which while are not a Google TPU just yet, they are moving in that direction. So I do believe there's various growth opportunities there. Neil, I sent you a quick link. I sent you a quick link on the private chat really quick, and it does seem like Meta Platforms is up after pre-market about 2-3% right now. I wonder if this is the main reason. It does seem like Meta is finding more ways to monetize WhatsApp, which is has been a market that they have massive eyes in and massive amount of users. I mean, I use it on a daily basis. I'm pretty sure most people outside of the US use it. Um, and or anybody who has any kind of international family tends to use it as well. So they are finding new ways to they're introducing channel subscriptions, promoted channels, and ad statuses and WhatsApp update tabs to help you find more products. So this is just going to be another way for them to get massive cash coming in, improving that free cash flow to continue to invest those massive scale AI investments that they're making.
Yeah, I mean, WhatsApp was a very expensive acquisition, right? 18, $19 billion, I think they paid for it. Monetization wise has been lacking, but I think they did a smart thing. It's to grow the user base of WhatsApp and then at one point say, okay, you know what? We've reached a couple of billions. We're good with it. And now we are going to make sure that it is extremely useful. So they started to add a couple of features here and there. In some countries, it is already monetized for a while. It has been used for businesses. And now, as we see, they are monetizing it more and more without really ruining the user experience, I'd say, right? Because that's the right. Because when I use WhatsApp, I want to just chat with people. I don't want to be bombarded with ads or businesses and stuff like that. So they've done they've done it pretty well. They've done it pretty well, and yeah, maybe this is the start of a huge monetization cycle for WhatsApp, which is pretty good.
Yeah, yeah, and like you mentioned, right in WhatsApp, you have kind of like those four different tabs. You have chats, updates, and communities. I would hate it if they ever bring it to like the chat side, but personally, I don't mind it in the updates or community sides as I would feel like those are more that social aspect of WhatsApp, like social media, typically like your TikTok or your Instagram or whatever, where it's something that flows with what we're already used to in the industry, but I'm not used to getting ads when I'm just sending text, right? So that's I think they have to be careful to make sure not to over add it in places that we know we don't want it.
Yeah, not for sure. I mean, I have a couple of channels that are communities that I'm in, which is very useful, like for announcements, maybe some shops or that run promotions. So they like send one message, you can just click on it and order, um, which is of course great for the ones that are using Meta shops that are using Meta system ads and whatnot. Pretty good, pretty. Let's see. Will again Neil with the this is I think is done on purpose. NEAL. It's NEIL. When will you talk about Accelera once? I think I talked about it a long time ago. It is one of those minus sub 1% positions in the portfolio, but I think I'll bring on someone on the channel to talk about it soon. Hopefully. Uh,
What is that stock, Neil?
biotech.
Oh, biotech.
So yeah,
You
that's
got
been another.
biotech friends? I see how it is. You leave the semiconductor guy, you find a biotech person. All right,
You have
all
to
right.
diversify, Jose. You have to diversify. How do you think we are going? I'm going to control everything. Yeah,
uh,
semiconductor, biotech. We create the absolute weapon.
which MAG ETF was I talking about? MAGS, MAGS, is the one I own, but I'm pretty sure there's other ones. And there was another question I wanted to take a closer look at, Neo, but I lost it. So if you see anything, feel free.
Um, no, there is this question about pool. I guess this is like it's a pool company, of course. I mean, it makes sense. Imagine you're not a pool
Like actual
company.
swimming pool?
Yeah,
Okay.
but yeah, it has only gone up 14%, and it makes sense, right? It makes sense if there is not a lot of buying activity in the housing market. I guess you don't have that much activity in renovations and in pool building. But yeah, pool is of course a company that deals with pools and stuff like that outdoors. So yeah, once rates come down, I guess this should be a tailwind for that company. But I don't know how fast these guys are growing. Do you follow ASTS? I do follow. Well, not that close, but I did a couple of videos about it. I think my last video was here. So not bad of a timing, I'd say. Almost doubled since. Almost doubled.
Not bad, Neo. Not bad at all.
The pump has worked.
We also had this comment, Neil. Thoughts about Intel? Um,
What is that?
your favorite semiconductor stock. Neil, has it changed? From your has your thoughts on Intel been changing, or is it still pretty much the same as when you invested in this company? Neil? And
One
if
one
changing
thing
can be both bullish or bearish, right? Has it just changed overall?
one thing has not changed, and that's the stock being down. That's one thing that did not change. So Intel, I mean, what has changed is I think the timing. I think I was too early, or too early, and I thought it would turn around sooner than uh, than what it did. I am giving it, of course, 2025 because 2025 is a big year. We now also have a new CEO plus 18A supposed to be the thing in the back half of this year. So if I'm not seeing anything that convinces me that they are really going in the right direction at the end of this year, then probably it might be time to say, you know what, I was wrong about it. But so far, they are delivering, but they're not over delivering. I guess the messaging also from a couple of people in management was not the best. Execution could have been better, but yeah, it all hinges on, I guess, the 18A execution for them and for potential clients. Because if, let's say, 18A is on time, comes out later this year, and we also have an announcement that an outside company is going to become a customer, I think the stock can double easily from here, if that happens, of course.
Yeah, I mean, agree. I think with the I'm not a shareholder of Intel. I've talked about it in the past. If I was, it would most likely be through a form of like call really long
dated call options. I agree that this is at the moment really the growth, massive growth opportunity is the foundry side, and it is kind of moving in the right direction. Um, I think for a long time, even after 18A is out for public use, it's still going to be questioned a lot. So it's going to be a volatile road, but if it executes strongly, which I think it can, this could be a massive winner. But it comes with risk. You have to innovate in so many fronts at the same time, and if you miss a beat, it can continue to underperform the market.
Yeah, I agree.
Uh,
Underperform quite a lot.
and just a quick level thoughts here on Credo, ticker CRDO. Any thoughts here? I mean, Credo, and there's a lot of companies in this space which are used that they provide technologies that help with the connectivity of AI accelerators like PCIe and other types of solutions, CERDAS, other types of solutions. I would say there's definitely growth opportunity here, especially being a small company. What's the market cap of this, Neil? I'm going to guess it's less than 10. It's about 12. All right, so close to 10. Um, there's competition from Credo. There's Astera Labs that also hits this market somewhat. You also have Broadcom and Marvell that do provide some form of networking solution. So it's a competitive landscape, but it is fueled by the AI race right now. So I think that's why you're seeing these massive valuation jumps. But I'm just not a true fan of the competition at these prices, right? So um, maybe this is one that you're going to see drop dramatically during downturns. But so there's growth opportunity, but the risk to reward ratio is not on my favor, Neil, just because of the competition.
Okay, fair enough. Fair enough. It did double from the April lows, I see. Not bad. Not bad. Currently, futures look green, as you can see right here. S&P, Dow, Nasdaq, Russell, all green at the moment. A question here. As a PayPal and SoFi investor, is it worrisome that private credit default is increasing and how it's going to impact, I guess, those two companies or fintech companies, especially with buy now, pay later coming up more? Um, I guess I mean, for a SoFi, when you have an average FICO score of 750, you have less of an issue, right? Because those are the ones that are less likely to default. With PayPal, yeah, with PayPal, maybe it might impact it a bit more, especially when we talk about the buy now, pay later arm. But even then, I think they've got, same with Affirm, I think they've got a lot of good data not to get screwed by this. Of course, those that do not have the necessary data and are overexposed can get hurt by this quite a lot. Of course, if we have an explosion, let's say across the board, it will impact those stocks for sure. But yeah, SoFi has super high quality customers. PayPal is, well, worldwide payment provider. Yes, it is also buy now pay later. Yes, it has Venmo. I just don't see how big of an impact or how drastic of the impact it will have on those two companies. Might have on some others.
Anything else we got here that we can tackle and from some questions before the market opens?
I have a question here about Asana.
Mhm.
Let's see. It's down 34% year to date, 45 6 months, 27 last month. After beating Wall Street estimates and first ever non-GAAP profitability, net retention rate dropped from 96 to 95. So net retention is already under 100. And it's high, but usually you want, especially for software, you want it to be probably above 100. And I'd say, let me just check really quick. Asana. Yeah, I'd say if you're looking at Asana, you might want to be looking at Monday.com. Also in the software space, growing much faster than Asana, actually. So why go with one that is down just for the sake of being down, while you can go with one that is up, but it's up for all the right reasons, which is this is a company that is firing on all cylinders. It is growing much faster than Asana. And I do believe that their retention is above 100% still. So makes more sense. Makes more sense, I'd say. Let me make sure that what I said was correct. Let's see. Yes, net dollar retention is above 100%, actually 112. And net dollar retention for customers with over 10 users is actually above 115. So yeah, I'd say Monday is a much better pick. I'll prepare already the market open because that opens in 3 minutes.
3 minutes, nice. Neil, right now, are you still kind of just focusing on building cash? Is there anything that's really caught your attention for you to kind of change from that thought process right now?
Yeah, so I yesterday in my portfolio video, I did talk about a couple of stocks that I want to buy because I thought we would actually have a red day today after everything that's been happening. But I had the local under $10. I would want to buy more. The local Rocket Lab closer to 20. Nebius, of course, if it drops under 40, I'll buy more. But yeah, so far I guess no no opportunities. So it's still cash, still cash.
Gosh. Yeah, Nebius is up about 2.3%. Did seem like it did get another price upgrade
Yep.
on the stock. And then let's see, what do we get? Well, we're waiting for the market open. Is it this one? Today, June 16th? Yeah. Davidson forecast strong price appreciation for Nebius. We got a price target from 50 to 55. Nice, nice, nice.
Yeah.
And that's
Nice.
earlier this month we saw a
$80, right?
REIT, yeah, 84. And then BWS also this month to $80. So a REIT coverage on Nebius with a buy at 84, and then BWS Financial with a buy at 80.
Yeah, all of them are chasing it right now. All of them are chasing. So hopefully it does drop. Hopefully it does drop. Yeah, the local is at just over $10 pre-market. But we'll see. By the way, this is what the market looked like on Friday when it closed. It's not how it is looking like right now. It will refresh pretty soon. It will refresh.
What was the red day on Friday, Neil? Because I don't. Were we already getting these attacks already?
Yep.
That was already happening.
Mm-hmm.
Sometimes the weekend feels so long that I forget what happened on Friday.
Yeah, it was this and something else maybe. No, I think it's just this. I think it was just this, but yeah, Oracle was green, Tesla was still green, Palantir was green. Of course, defense companies were green. But yeah. Question about Adobe. We did talk about Adobe closer to the start of this stream, so I suggest to rewind to that part.
Yeah, we had Adobe's screenshot showing, so feel free. You'll be able to find it pretty quickly.
Okay, so it looks a bit better now with the refresh. Some things still need to refresh a bit more, but yeah, Meta is up 2.4, so maybe it's because of that monetization of WhatsApp.
I think so.
Yeah, because I mean, if they can monetize that, that's another multi-billion-dollar business for them for sure.
Yeah, let me look at trading my watch list to see anything happening in the semiconductor space.
Yeah, Palantir $331 billion in market cap for Palantir, another 2.3% added today. Meta 2.6, so back above 700. Ooh, AMD 118, up a little bit. Nvidia is up, Tesla is up as well.
Trade desk is almost flat now. I know we saw it earlier this morning, Neil, where it was down a few percent, but now it's pretty much flat.
United Health at 311. You know, yeah, trades. I mean, United Health is still something that I'm like, should I not, should I not? Because it's I mean, the company, it's worth now $282 billion. It generated just over $400 billion in 2024. It's crazy. It's crazy. I know some people, I saw already some people compare, Palantir barely generates $4 billion and it's worth $100 billion more than United Health. How is that possible? I'm like, why come to insurance? It just doesn't make any sense.
I'm pretty surprised to see AMD up right now. I guess the world is waking up to maybe some of the cool things that it
Yeah,
had.
I mean, this is what happened with Google, right? With Google I/O, it needed a day or two to realize. Actually, you remember that Oracle announcement that they mentioned during the event? The
Sorry, I thought the babysitter was calling me. All right, yeah. Sorry, Nia, I lost thoughts. All right, go back.
the Oracle announcement, right, with AMD,
Mm-hmm.
right? Because we were talking about 33,000, and then they say 27,000 will be online in the next month or two. But then I
Yep.
saw this Oracle to deploy cluster of more than 130,000 AMD MI355X GPUs. And I was like, huh.
Yeah, that's weird.
Not
It's gonna,
bad.
yeah. I mean, they mentioned. I think they mentioned it that they were gonna go to the SETA scale
Yep.
AI cluster. So I
And I
guess
guess
this
that's
person, yeah, clusters. Okay, so but is it gonna be? Was it for the MI350 that they mentioned those SETA scale, or is it just gonna be in general? I'm gonna have to re-listen to it. But yeah, that's massive.
yeah. Because when I saw this, I'm like, the market might have missed something here. But yeah, I guess this is just a calculation of maybe how many of those you need to get to the
SETA
supercluster.
scale.
Yeah, yeah.
Yeah.
So
Interesting.
yeah. So far, this is it. So yeah, pretty good day so far.
Mm-hmm.
Pretty good
Yeah.
day so far. Did run a poll. Do we end the day green, red, flat? We have here green 65%, and then red and flat. So it's 18%, 18, 19, depending on when I watch that. So yeah. Anything else you wanna cover, or we will come back tomorrow?
No, nothing else new. I think that's it. I mean, good pre-market open here. A lot of great questions. Got me a lot of great questions. So appreciate the support from everybody. And we'll see you again tomorrow for another breakfast, lunch, dinner stream that we're hosting here on both our channels.
Exactly. So thank you all for joining. We'll see each other tomorrow, and then look at this, what I have prepared. If it works. I don't know if it works. Ta-da!
Ta-da!